Hello, YouTube. It's here. We're going to get a big move, and there's a 99% chance the Fed does a whole bunch of nothing tomorrow. Is that what Jerome Powell wants us to think? As we look behind these light brown eyes, that's right, they're light brown, they're not blue. But let's just say, again, no one knows what it's like to be the bad man, the sad man. Well, Jerome Powell's going to have to make a pretty tough decision tomorrow. Is he going to pause rates, or is he going to give the market a clue that maybe yields are going to go higher? Because historically, one of these lines is going to be right and one's going to be wrong. When the red line goes up, the black line goes down. That's what normally happens. They're both going up together right now. And this is the relationship between the NASDAQ and the 10-year note. I don't think it's going to continue, but we're already seeing a big move lower into September. We're currently, I believe, right around the low of the month. And the reason why this is so interesting is because we know that when stocks run into earnings, if we have a look here at Netflix as an example, when we run into earnings, it's hard to go higher, even on a beat, like Netflix did. They beat earnings. The chart did not advance. Why? Because a lot of it was already priced in going into the event, which means it's harder to outperform. You can think of the FOMC, or the Federal Open Market Committee, kind of like earnings for the S&P 500. So we've ran up, but now we've actually had a little bit of a hangover, dead cat bounce, and now we're actually right here around the lows, which means we're right around support. We've got a uncertainty happening on the weekly chart here. Our monthly chart is still in consolidation. So I think that if we're going to get a big explosive move tomorrow, it might be to the upside. It might also be to the downside. We can look to two templates to know what that would be. As of right now, we do not have a weekly higher low for this week. But if we manage to close above 443 or higher, it means we're going to have a failed break, which is usually a reversal signal. So a failed breakdown is usually a reversal signal. We can see that happening almost here. It does happen here as well. And it also happened here. So usually on reversals, we'll see a lower tail, we'll see a failed breakdown, and then we get the reversal. So if Jerome Powell comes in tomorrow and he provides positive guidance, which is what? The SEP, or the Summary of Economic Projections, it means the market's probably going to go up. But if he decides that, you know what, I think stocks need to cool off a little bit, I don't think he's personally going to do that. Why? Well, because we're going into the end of the year. We're going into an election year. And I believe that he wants things to be stable and wants them to be good. So we got a lot to go through today, but I'm going to ask you for a huge favor, please and thank you. If you could please consider subscribing to the channel and or smashing that thumbs up, I would really, really appreciate it. Thank you so much ahead of time. I appreciate everybody's support. And it's just been a lot of fun to create these videos. So thank you so much for your support. All right, if we think about the 99% chance, we know that there's no real cut price in until next year. I think it really comes down to the commentary for tomorrow, because if there's a 99% chance, it means the market's not going to be surprised if they pause tomorrow. I think what's going to be interesting here is whether or not he says that there's going to be a hike in November. We're going to wait for incoming data. Inflation's getting hot. But I think it's really going to come down to the SEP, which is what the Fed basically thinks the economy is going to do, and then Jerome Powell's commentary. So what's going to happen tomorrow? Well, tomorrow we're going to have an event coming in at 2 o'clock, which means we're going to get that headline. We're going to get the SEP, or the economic projections. We'll get the interest rate decision and the statement. And then at 2:30, Jerome Powell's going to come in. So I want you to pay attention to this. And in the title of the video, I say, I mentioned, right, do this big move coming. And here's what we want to do to get ready for it. So if we think about running up into earnings, which is what we're going to be doing tomorrow with the Fed, that's usually not good. And the reason why it's not good is because it just means they're going to have to deliver something extra for us to keep going higher. So what will normally happen, again, keyword here being normal, is that we usually get some kind of knee-jerk reaction. So usually, whatever happens between 2 and 2:30, if that's a move down, we'll usually go higher into the end of the day. If we get a move higher between 2 and 2:30, expect for there to be a fade. So that's called the fake out. It's usually called a knee-jerk reaction, where we move in one direction and then violently snap back the other way. We go up. I'll be looking for the move lower into the end of the day, watching for key areas like the low of the day or the low of the week relative to last week's low. So that's basically 440 and 443. Other thing I would note is that we want to make sure we're mindful of other charts as we're getting ready for here. So I think Jerome's going to be trying to toe the line tomorrow. I think if there's going to be a surprise, it's likely going to be in his commentary at 2:30. So I'm watching for these two things to play out. But if we're right, even if we do move lower into the end of the month, I'm watching to see if this pattern plays out here. It's an inside bar. So an inside bar means consolidation. And until we get a break, either one way or the other, I've been following, I've been mentioning this pattern over and over. And it's a monthly pattern, so we have to be very patient as it materializes. But as of right now, we've got the whole recipe. We got 1, 2, 3, and 4. So if we can hold the low and form a higher high, man, it's going to be boomtowns, baby. We're going to be rallying Santa Claus rally into the end of the year. Those sweet, sweet gains. All right. Something else I would notice that we've come down running up into earnings, which is what the FOMC is going to be tomorrow. But we're also seeing that we were neutral a month ago. We were neutral a week ago. We were neutral yesterday. We're neutral today, which means the market's not currently greedy. We can flip that switch and get right back in the greed pretty fast, but we can equally get a flip and go back into fear pretty fast tomorrow too. So the two charts to pay attention to are going to be for the bulls. They want to maintain 433 on SPY for this pattern to play out. You can see that right here. So if we maintain the low at 433.01, we'd have to drop by nearly 10 points tomorrow. That'd be a pretty big drop. But for the bears, what they want to see is they want to see us close below 442 on SPY for the potential or a delayed effect for us to basically do the reversal pattern, which is the yellow box, and could lead for us to get a 10% dip all the way down to roughly 413 on SPY. So most people track SPY, so the numbers are right here, roughly 413 or the 50 weekly moving average. And now that we've stopped going up, as of now, the week's not closed out, there is a potential that we're going sideways and that could lead to a move lower. So please remember, the printed close at 4 o'clock on Friday is what matters. If we're above 443 or below 442, that will signify whether or not this is a breakdown or a failed breakdown. Failing to break down just means that there was no follow through from the sellers, which means we're probably going to go higher. So we find equilibrium in the chart or those inside bars. We find equilibrium in the fear and greed. We find equilibrium or the smallest short position going all the way back to 2022 for the CFTC here. We also note that, man, it's not like anything's easy lately. Look at the heat map here. 1 day, 1 week, 1 month. 1 month seems like it's easy, but if we go back like 1 week, a little bit less, it's not been easy out there. If we had a hangover after the quad witching, that should start to get unwound pretty fast. And then for the rest of this week, there is other economic data. So we talked about yesterday how there's going to be an interest rate decision kicking off globally. Well, that kicks off with the Fed, and then we're going to have the BOE, and then we're going to have, I think that's it. Then we got PMI. And we're currently anticipating an interest rate increase in England. So I want to know whether or not what happened to the ECB last week, where they had a surprise hike, is going to be the same thing we have here. We're expecting a hike. If we come in line, what is going to happen? That's what I'll be paying particular attention to. I would also note that the Fed is already at 5.5. So we're expecting that the BOE is going to come up to where the Fed already is. And the ECB is about 1% behind. So that's like really important for us. So now what I want to do is if we're expecting a potentially violent move tomorrow, and if the low established so far at roughly 440 holds, that's a key area I want for us to pay attention to. But also, we've now spent 3 days back below that moving average. So if we lose that low, the wheels could be in motion and we could be heading for a move lower. Volume also supports the move from Friday. So now we're going to go through and do that exact same thing we've done before, where we go to the 50 DMA club and we want to see who is above and below. So all we're looking for is to see whether or not we are above or below the blue line. S&P, 3 days below. QQQ, 3 days below. So it's not looking great here. SMH, man, many days below, going all the way back to September 7th. That's a lot of days now. NVIDIA, below. It's showing some signs of stabilizing. It is a higher low, but we're going to have to pay attention to this. I'm not feeling confident one way yet. Apple, it looks like a W was in the May King. It's just not yet quite there. And the reason why Apple's interesting is because you note this number here at 182, that corresponds with last year's high. So we got 182.13, and then we have 182.94. So if we're not above 182, we're not above the annual highs. This is something I need to see happen. Not one, I need to see Apple flex, move higher, closer to 184 or the 50 DMA, which ironically lines up with the same thing we're looking at in other charts. For me to say the market is strong, healthy, sexy, and wants to go higher. We can also note here that Tesla is still maintaining its daily uptrend after stopping to go down. It's looking strong. over the 50 MA. We have to see other stocks emerge as leaders or advance over their 50 MA so they have a chance to soft land and then bounce off their moving average. FXI, I'm not sure. We're trading America, so we can clearly see there's weakness in the rest of the world, notably in China, right? They're desperate. I saw a headline yesterday that they're meeting with people from Tesla, people from the government. There was a government agent that went there, and they're trying to solicit people to come and invest. What does that mean? It smells like desperation. It smells like they need business. It smells like they know they need to grow. Microsoft here, third day below the 50 MA. Same thing, 337 is going to be an annual top. We're not going to make progress unless we're over that area, which would mean we're going to be over the 50 MA. So we want to really get back above the 50 DMA on Microsoft. On ARC, I'm not sure. For me, it looks like an inverse head and shoulders here, but the left side is really extended. This right side is really short, right? The box is small relative to the left side. So I'm going to discount this one here, but ARC has definitely been a target for short sellers lately too. So I'll just be watching it for sentiment. I'm not sure. I'm really curious too, if you guys can drop me a comment. There were some competing comments yesterday about people not wanting me to say I don't know or I'm not sure. Frankly, sometimes I don't know. So I can either say nothing and leave you flying blind, or I can tell you when I feel confident and when I don't feel confident. If I was the viewer, I would appreciate it if the presenter told me when they feel confident in something, their level of confidence, but also when they don't feel confident. Why? I'm not trying to pretend I know everything. I'm sure some people who are watching this video know more than me. So just curious on your feedback because I'm trying to make these videos for you. So I'm asking for feedback and I would appreciate it. All right, and one more time, if you're still watching, please consider smashing the thumbs up and subscribing to the channel. We put out stock market videos every single day. Thank you ahead of time. The DAX, probably looking for direction from the S&P, but we spent a lot of time below here, going all the way. We've not spent 1 day in September above the 50 MA. We're really stuck. 250 dance, right? Bounce, 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 bounce. We're stuck. We're range bound. Watching for a break. XIU or Canada, sell it, right? What a big sell. Inflation went up in Canada above 4% thanks to gasoline prices. So giving a little bit of a negative reaction going into the Fed tomorrow. Emerging markets, weak, but that same thing as Apple. I'm noticing the W. We have to just see it actually play out. Moving forward to the Nikkei is strong. It is silky smooth. It looks like it wants to keep going higher, right around 52-week highs right here. And then finally, Ether and Bitcoin, catching a little bit of a bid. Bitcoin trying to digest its 50 DMA. I'd want to see it power up over 28K tomorrow to confirm the move higher. And then finally, the last two I want to look at here, because we really want to make sure we understand what is inversely correlated to the market, is the 2-year note and the 10-year note. Strong bounces off the 50 MA here every single time for the 2-year note. That's not what we want to see if we're bullish on stocks. And then finally, looking at the 10-year note, similar story, right? Golden cross, right? I like seeing that. Bounce, bounce. This is bullish. The bullish bounces here. So the saying is that the stock market takes the staircase up and the elevator down. So I'm ready for whatever happens next. As a final reminder, until we lose 433 on SPY, or even if we drop by as much as about 2% tomorrow, I'm not going to say the bears are cinching victory until I see what is happening here on the weekly chart for the S&P, meaning that we're closing below last week's low, basically closing red. And then we got to close a month back below, because if you note here, last month was a failed breakdown, which means technically at some point on the monthly chart, the bears were right. We were in a monthly lower low below the previous monthly low. That's quite bearish, but then it turned into a fail. So we want to make sure we really give these charts some time to close out before we make a decision one way or the other. And with that said, if you want to watch the video from the weekend now, that is queued up here on the left-hand side. If not, thank you so much for your support, and I wish you all the best of luck into Powell tomorrow. Thank you again.